All right, welcome everybody to the Trader Circle, August of 2024. My name is Advent, and I am not a financial advisor. Anything that we go over in today's session or any of my content that you see is not to be taken as financial advice. It isn't financial advice and is only for educational purposes only. Trading does have its risks, so please do your research before you engage in trading. So for those who are new here, who've never been to one of the Trader Circles, this is pretty much where you can ask me anything, like literally anything, and I'll answer it to help you out, improve your trading, whatever it may be. Any question is valid, so don't feel that, you may have a stupid question or that it's a silly question or whatever it may be. Everybody that comes here is at different levels of the trading journey, whether it be beginner, expert, seasoned, whatever it may be. And, any question can help anybody out. Even a simple question can help an experienced trader out if they even forgot about it. So don't feel embarrassed of any question that you ask. There are no stupid questions in the business of trading. I'll tell you that from experience and people that I've worked with. So any question is valid here. And yeah, we can start off with that. Let me bring up the questionnaire. And reminder, for those who do ask questions, you need to attend for me to answer them. So if you just type it in and you don't attend, I'm not going to answer your question. I like talking to people. I don't like talking to nothing. So if you want me to be here and I'm here for you, at least give me the decency of being here yourself. I get it. Life happens. Fair enough. But don't think you're just going to ask a question and it's going to be answered and you'll watch the replay. It's not how it works here. All right. So is Rick here? Let's see. Where are... All right, Rick. Thanks for being here. All right, you asked, you know the basics of the strat and you chart sometimes and it goes in your favor. Sometimes it doesn't. I do remember you from 100K's group when you posted the chart up there. You mentioned that you got to get out of your own way. What exactly do you mean by that? Like, how are you getting in your own way? And you can come off mute. You can type it in the chat. Either way is fine. You don't let the trades play out in the sense that, are you looking at the P&L, or are you looking at the money that you're up or down and then you just take the trade off? Or let's say you're in a trade and you're up, let's say 30%, and then it hasn't hit your target yet, and then you'll take profit and then it'll continue shooting up to your target. Well, we'll definitely go over that B in a few. So yeah, Rick, are you like in profit and then you just take it? Any pullback, I think it's going the other way and get out. So let's bring up the chart and then we'll look at an example. Let's bring up Bitcoin since that's live right now. So let's say for the sake of the conversation, I'm just going to put a random short order here. Let's say you're short on this trade and your stop loss is up here and your take profit is over here. But let's pretend you got in like somewhere up here and you're up however much you may be up. Let's say price reverses and goes up a little bit. You will get scared and you'll get out of the trade instead of letting it hit your take profit or your stop loss. You'll like take the trade off early on that pullback. Gotcha. So what I would do in your case is, first of all, if you already get into a trade, your job is done as a trader. What you need to do, or what I would do rather, since I can't tell you what to do, What I would do is set your alerts. And then once you set your alerts, you just wait until one of them hits, whether it be your take profit or your stop loss. Because when we're trading, our human mind is not designed to trade because trading is just uncertainty. Our brain doesn't like to be in uncertain situations. It likes to control things. So when you're in the trade, let's say you're up, I don't know, 30, 40%. And then for the sake of the conversation, the first target is, let's say, 50%. Your brain is feeling pain, and your brain does not like the idea of letting your green trade go red. So in order to stop that pain that your brain doesn't want to feel, it's telling you to get out the trade. So you got to ask yourself this question. Would you rather feel the pain of, or rather getting rid of the pain of getting out of a trade early so it doesn't go red, even though it hasn't even hit your target? Or would you rather, let me see, how do I make this make more sense to make it clear? Do you want to get rid of the pain when you're in a trade because you're so nervous? Or is it going to hurt more if you get out and then it goes to your target? So you got to ask yourself, do you want the pain of just, or do you want to get rid of the pain because you're like, oh my God, I'm up 30%. Let me take it off before it goes red. And then you take it off and then you feel more pain because it went to your target and you got in your own way again. So you got to ask yourself, what do you want? If you want to keep on, getting yourself out early to get rid of that uncomfortability of seeing the trade go against you when it's green, or do you not want to feel the pain when it goes to your target, but you got out early? So now you're even more upset than you were originally. So what I would do in your case is, first of all, you need to turn off your P&L. You looking at your P&L is irrelevant to you trading, because your P&L or your profit or whatever it may be didn't get you into the trade. The chart got you into the trade. So the chart needs to take you out. So if you have your P&L open or like on, let's say like this, you need to take that off because it's triggering you to getting yourself out of the trade early. So the only thing I would be doing is, once I get in the trade, you set your alerts and then go about your business and then just wait. That's your job as a trader. Once you get in the trade, you wait. Because once you start messing around with the trade, you're no longer trading. You're emotionally trading. So do that and follow up with me in a week and let me know how that worked for you. So, and do you trade options or do you trade futures? I think you trade options, if I recall correctly. Options? Cool. So do you use Robinhood, Webull, Thinkorswim, or what platform do you use? So yeah, what trading platform do you use? Robinhood, Webull, E-Trade, Thinkorswim? I'm paper trading right now on Webull, which is great. Definitely paper trade as you're learning something new. You don't want to use your real money and experiment, and that's just silly. So definitely paper trade until you get the hang of it. And remember, when you go back to using your real money, turn off your P&L, because your P&L is irrelevant of you being in the trade. Of course, you want to follow your risk management. You don't want to size up too much. So definitely get your system in place. And then from there, once you get some consistency in your paper trading, when you're consistently making money, then you can go into your live trading and go from there. Of course. right, let's see who's next. Where are the participants? There we go. All right, next person I have here is Evans here. I don't think Evans is here. He just said, oh, another thing that I want to mention, when you guys are asking your questions and what you want to go over, please be as specific as possible just so I can be better prepared, because Evans just said psychology. That is the vaguest thing anybody can ever ask me when it comes to trading psychology. There's like a billion ways I can answer that. So if you can be a little more specific, that would be great. All right, next person. Is Connie here? I don't see Connie's name in the list, so we will skip her. Karika is definitely here. Karika, you asked reading charts and understanding proper setups. Reading charts in what sense? Like, if you can, elaborate a little bit for me. What I mean by that. Or is your reading charts question in the sense of understanding proper setups? Because reading charts and then understanding proper setups, those are two very different things that I can go really deep into. So I just want to get clear before I answer it. And again, you guys can come off mute, type it in the chat. Either one is fine. Do you use any other indicators to validate the strat, or all you pretty much need is the BF and strat? I'll answer that question after this one, Abdul. When we have a candlestick chart and we are thinking about trading, what are we looking for before we move forward in placing a trade? Karika, do you trade the strat? Or actually, better question, where did you find me? Did you find me on YouTube, Reddit, Discord? And if you did find me on Discord, which specific group did you find me on? Just so I can see where you're at and what you know.
Are you hearing me?
Yeah, I can hear you.
Okay. It's I found you on YouTube. I actually was recommended by a friend. Um, so I saw you on YouTube. Um, and she recommended this session. So here I am.
Sweet. Do you know anything about the strat?
I've been trying to study it and understand it. I don't get everything. But yeah, it's something that I'm interested in learning.
Cool. So I'll just answer that question in like with the strat. So when I'm looking at a chart, it really depends because I have a bunch of different setups that I like to take. But generally, let's say I'm looking at what do you trade? I'll look at a ticker that you trade and then I'll go from there. Do you trade like SPY?
Well, we've been trying to do a lot of the SPY, so we could probably look at that.
Cool. So SPY.
Yes.
So looking at SPY, this is what I'll be looking for SPY tomorrow. I don't trade it, but this is what I'll be looking at for tomorrow. If it breaks above, let me actually just change this. So if price breaks above 534.51, I'm going to go long. That going long means, you could buy shares, you can buy calls, whatever instrument you're trading. So if it breaks this price right here, I'm going to immediately go long. For the strat, when we get into a trade, so the next candle, if it triggers up and breaks this high, we immediately go long. We don't wait for the candle to close. We don't wait for like a retest. We get in immediately as soon as it breaks that level. If you wait until the candle closes, you're too late. And also, this is a 4-hour chart. So if you wait until the candle closes, the move is pretty much going to be done. So let me delete this bottom one. So for the strat, it just makes things simple. Let's pretend I'm gonna draw like a fake candle. Let's pretend the net tomorrow happened, and this is the first 4 hour candle that we have right here. And let's so with the strat, your target is going to be the if you're going long, your targets are the previous candle highs. So my 4 hour trigger or my 4 hour target will be here. That's my first 4 hour target. So if I were to go long, I would be looking to take profit or at least trim my position once it hits this level, which is this previous high over here. Now, your stop loss, that depends on your risk tolerance and your risk profile. So for me, it really depends on the setup. Again, let's pretend that this block here that I drew, let me just make it a little more visible. Let's do 56. So this bar that I drew, let's pretend this is the candle that got us in for the long. You can either put your stop loss under the candle that triggered you in. So right here, you take that 2 up, and then your stop loss could be right under that. Or you could use 50% of the previous candle. So half of this candle could be your stop loss if price comes back and hits that point. Or you can use the setup candle as your stop loss, so putting your stop down here. Again, it really depends on how risk averse you are. I usually just use 50% of the previous candle or the trigger candle, depending how wide the stop loss may be. Maybe, excuse me, maybe. However, something to note, for SPY, its ATR has been about $9 to $10 with the volatility in the market. So if you get something where the first target may be like $5 away, I'm not going to hold that trade until it hits that target. I'm probably going to be just taking profit every $2 that it goes in my favor. Because what you don't want is for the price, let's say to go $5 in your favor and your target is $6 based on the strat, and then it goes against you. So that's where you can use the ATR indicator. You can divide the ATR by 5 or 6 or whatever number you want to use. I usually use 5 or 6 if the price is above like $9-10. And then from there, you could be like, all right, I could take profit every $2 because on average, when it breaks this 4 hour level, it moves that amount. Let me know if that makes sense before I continue. I know I said a lot.
Yeah, you did. But so I see where your line here for the previous candle. In my head, I'm thinking the previous candle would be that green candle there. So why did you draw your line over to this red candle at this red 2 here?
You mean this right here?
No, the one at the very top, that for that 4 hour target, you have that line right up there.
Oh, this
Yeah.
right here, where it says 4.
Yeah, for that 4, and you draw it to this red candle here.
So remember, it's the previous candle highs.
Gotcha. Okay.
This is not a high from this. This is a low from this candle.
Gotcha. Okay. Okay.
Yep. And then an opposite, let's say we're going short, we break that down here. And let's say we trigger short like this, you will go short as soon as it breaks that level, and you're going to be targeting the previous lows. So this low, you can use the body or the wick. If it's this far away from the next target, I'll probably use the body, because from this target here to there, that's about almost like $6, almost its entire ATR, which is more than likely not going to hit. So you can, use the body as the next target, or like I said, you could take profit every $2 if you want. That works too. At least that's what I would do. So when you're starting off with the strat, you want to keep it simple. Rob always says, if you're new to the strat, to use the higher time frames. So, the 4 hour, the daily, the 1 hour, stuff like that. Then once you get used to it, then you can go to the lower time frames and go from there. For me, I just keep it super, super simple. 4 hour from my initial trade. If I miss that entry, so let's say, let's say we have right here, let's say I was looking to go short and we gap down, as we can see here, we have this big gap. If price gaps down, I'm not gonna get in for to a short because the the trade is too far away now. So instead of me getting in right over here for my entry, I might be getting in down here. That's an extra $3.62 that I'm going to be taking as a loss because if my stop loss is up here at $4, let's say from entry, but I enter in down here, that's a $7 stop loss, which is way too much. So if it gaps down or gaps up from the entry, I just go to the 5 or 15 minute and then I just look for a TTO to get in on the trend. So for example, if you don't know what a TTO is, the bearish ones, you can just look at as an H pattern or a dead cat bounce. I'm sure you might have heard that term, a lowercase h to be exact. So we can just pretend there's like a big red candle here, and then the price comes up a little bit and then keeps on going down. So a bearish TTO or H pattern, to keep it simple, will look something like this and keeps on going down. And then a bullish one, if we get a gap up and it's going to be a bullish trend day, it'll look something like this. So, whoops, that's not that extra bit there. But yeah, basically, we get the push down. Market makers push it up to stop out everybody who went short too late. And then they keep on bringing it down. So in this case, what I would do if we miss the initial entry for the gap down, or if it gaps down, I would just wait for a TTO. Because if it's going to be a trend day, the TTO is going to appear. You just have to wait for it, which in this case, we got right here. I would go short as soon as it breaks this low, this candle's low. So short, whoops. So short below, that's not what I want. So short below. Your stop loss, or where I would put my stop loss, is right above the TTO area. So my stop loss will be up here. You can target the completion if you want of the TTO. So right here will be like target 1. And then you can just take profit every dollar or two that it goes in your favor if you're trading SPY. That way, if it gaps down, I'm not getting in all the way down here to absorb all of this pullback. I'm just waiting for the proper entry to get in, which will be right here. So I'm minimizing my stop loss. So instead of having a stop loss, if I get in here of like 8 points, if I just wait for the better setup, my stop loss now is only $1 and change. And then I can take all of this if it's a trend day. So you're minimizing your risk and you're expanding on your profits if it does become a trend day and continue going down. Let me know if that made sense.
Yes, that makes a lot of sense. Thank you.
Cool. So if you want to just keep it simple as learning the strat, something to mention as well. When you're getting your levels, you cannot have extended or pre-market data on. It has to be regular trading hours. So go on the 4-hour, the last printed candle, I go long above that price, or I go short below that price, that last candle that printed. Again, you want to keep trading simple. You don't want to overcomplicate it.
And this is for the day that like the morning of,
I do my watches the day before. So I
the day
already have my
before.
watches
Gotcha.
out for tomorrow because remember, we're just using regular trading hours.
Okay.
So I already have my levels out for everything. So I'm not sure if you're in my group or not, or other groups that I may be in. So whatever groups that I am in, if you're in any of them or mine, I post my watch list every day with different tickers. So I have all the levels there for the 4-hour. I only trade YM for futures, which is this right here. And then I only trade either Tesla or Nvidia. I choose one or the other. So I only trade 2 things. The extra tickers that I have here just for other people that they always ask me to put those tickers in. So I just kept it as a permanent addition to the watch list. Cool. Questions? All that made sense before I continue to the next one?
You mentioned time frames. And I realized that when I was um listening on some of these videos as it relates to strat, it talks a lot about time frames, the different time frames. How important is time frames to the strat?
Do you mean time frame, like time frame continuity?
Yes.
So time frame continuity is important depending what you're doing. If I'm looking at the like, if the daily 4 hour and let's say the 1 hour are green, I'm not going to be looking for shorts because I'm going against the trend. Instead, you want to be looking for a setup that's going to put you back into the trend, which is what a TTO does. Like I showed you earlier on SPY on the 5 minute on that big gap down. Let's go back real quick. Like as I showed you right here, we're obviously bearish on the day because we broke below the 4 hour daily and the 1 hour. So those three time frames are red. And now when it comes back up, so whoever took this bullish two up on the 5 minute thinking, oh, price is reversing. Nope, you got stopped out because price came up, failed to continue higher and continued going back down. That's a low probability trade. As opposed to, let me just take this bearish reversal back into the bearish continuity, which is a higher probability trade. So it's definitely important. The only times I go against time continuity is if I'm taking a reversal off of a broadening formation, which is support and resistance for strat users. So you don't want to just take a random reversal in the middle of nowhere because that's not a high probability trade. Now, let's say for NVIDIA, I think this happened on Friday. Did it happen on Friday? On the 15-minute, it might have been. Let's say right here we have this is a 15-minute candle. It prints like a little doji hammer right off this broadening formation, which is support. I will take that trade to the upside, even though we're red because we opened, we're below the opening price. As opposed to just taking a reversal in the middle of a broadening formation in the middle of nowhere, like over here. If you take this two down, sure, it did hit target, fair enough, but you only really want to be looking for the higher probability trades. Yeah, Abdul, the gaps happen between yesterday's closing price and the new opening price for the New York session. The gap is what happened in like after hours, Asia and London session. But yeah, definitely keep on going through the strat material. It'll make more sense, as you continue. But if you're new to it, I would just stick to the 4 hour and the 1 hour as you start off, and then, slowly continue from there. All right, let's see. Abdal asked, do you use any other indicators to validate the strat, or all you pretty much use the BF and the strat? Pretty much, as the way you see my chart, that's all I use. I don't use anything else. Like I said, I don't use volume. I don't use RSI. I don't use EMAs. To me, all of that is useless. And remember, I am extremely biased when I say that. I'm extremely biased to the strat. It's useless, in my opinion. If it works for you, keep on using it. Don't listen to me. But to me, again, in my biased opinion, if you're new to trading or just in general, you want to understand fundamentally price action. Because price action is price action is what everything is derived from. All your EMAs, all your RSI is based off of price. So why not just trade price itself? Because if people are using the 9 or 21 EMA cross or the 820 or 812, whatever EMA crosses set up or strategy there are, it doesn't, what's the point, right? Because strat might get you in over here, but the EMA might get you in 3 candles later.
Who is target trouble? Armada EAT.
So let's see. So with the strat, yeah, all those indicators are lagging. They're lagging behind what price is doing. Indicators that I use, Mariana, is the strat indicator. So you can see the little numbers and stuff here. And then the ATR indicator, which tells me how much on average that specific ticker moves in a day, just so I have an idea. On TW,
Thinkorswim.
Thinkorswim. Thinkorswim, for those indicators, I would have to send it to you. TradingView, well, TradingView,
You see him on.
the strat indicator is just strat assistant. That's the one for TradingView. The ATR is just SATI ATR by SATI Mahajan. And then the ATR custom is just, I just edited the code to take off the calls above and puts below because I don't need that. I have my own levels. But yeah, those are indicators that I use. Cool. All right. Cassie or Casey, you mentioned consistency and stop getting shaken out of your positions. So correct me if I'm wrong, is it Cassie or is it Casey? Is it the first one or the second one?
Can you hear me?
I can hear you.
Oh, it's Cassie.
Cool.
Yeah, I think you pretty much answered it from the first guy when he was talking about psychology.
Sweet. Yeah, if you have your P&L, definitely turn that off. You don't, once you get into the trade, that's it. There's nothing else for you to do. If you trade options, on Thinkorswim, I don't know how to do it on the desktop version, but on the mobile version, you can set it to market conditions. So I can literally just set like my take profit to get out at the specific stock price, and then I can have it stop me out at the specific stock price. If you're in 100K's Discord or in mine, just send me a DM and then I'll just link you to the post that I made with the video explaining how to do it.
Yeah, I saw that post on Friday. Yeah.
Oh, perfect. Yeah, that way you could literally just automate the trade and just walk away, and that's it. Because once you get in a trade, you looking at it is not going to make it go up faster or slower. You're just making yourself more emotional for no reason.
Yeah,
So,
because it's like I know like the price that I was looking at to get out, but I just didn't know how to calculate the percentages. But since you sent that information about actually getting out at the stock price rather than the premium option premium, that's a lot better.
oh, 100%. I've been trying to figure that out for the last like 2 years. So, so I'm glad they sent Ro sent that to me, because I used to like calculate what the premium should be more or less at the target, and then I'll just put the order in. But with that, I know for a fact it's going to take me out at that specific price, and whatever the premium is, that's what the premium is. So it just makes it easier. Cool. All right. Kia, we talked about this already, but we'll go over it again for other people. Holding your positions, stop loss placements, entries, how to keep from being scared during winning trades and hopeful during losing trades. All right. And you just finished typing. Cool. All right, let me get to your other questions. Where do you place your stop loss when you're swing trading an overnight position? Where do you find your bias for the day? Do you use internal or external structure? That's like an ICT thing. I don't use none of that. I kind of have it in my head, but I don't pay attention to it really. Are you using monthly, weekly, and daily highs and lows for targets, or do you only use the previous candles and BFs? Great question, Kia. And you know what I'm going to tell you? In the course, I literally have a section that says getting targets using ATR, fibs, candles, etc. But because we're good friends, I will mention it again. So, first and foremost, I don't swing trades overnight. I have never taught you to swing trades overnight. So I can't really tell you where to place your stop loss because I don't do that. I don't, and especially if you're trading IWM and you're holding trades overnight, I'm gonna send you a voice note later on. But I don't hold trades for an overnight trade at all, unless it's like a runner position and I'm up like 300% and I want to see if I can squeeze some more juice out of it. Sure, I'll leave it overnight. But if I'm in for a day trade and my day trade will never become a swing trade ever, unless I'm up 300-400%. And even then, I'll probably just take it off because I like to sleep at night. So a day trade will never become a swing trade for me. And a swing trade can become a day trade if it's a target, because I'm expecting it to take a few days to hit the target based on a swing trade. But sometimes it's hit my target the same day. So I'll like trim that position and move my stop up to break even. But a day trade, I would never let that become a swing trade, because if it didn't hit your target based on the daily setup, then it's an invalid trade. Because not only are you opening yourself up for a bigger loss, because let's say for the sake of the conversation, let's say you're in calls, right? Actually, let me bring this up here. Let's say on Thursday into Friday, you went long. So you're long and the price closed here at $1.65 in your favor. Let's say that you have, let's say the theta is like $30 on the contract. The theta affects you over the weekend. So Saturday, Sunday, that theta gets added to your contract, even though the market is closed. So when the market opens up on Monday, you're going to get hit with 2 days of theta. So keep that in mind if you're going to be swing trading positions, just like from one day or like from Friday to Monday. So yeah, if it's like a runner position, sure, I would gladly swing that overnight, even though I never do, or almost always never do. In the sense of your stop loss, where it should be, well, your stop loss should be at your break even or at target 1 or target 2 or whatever it may be. So if I get in here and it hit like target 3, and then it opens up on Monday between target 3 and 2, I'm not going to let it go more than target 2 if it does go against me. Because if I'm 300%, I'm not going to let it go back to 5% near break even. Yeah, so when you guys hear me say never let a winning position go red, that means that once it hits the first target, it's a winning trade. That trade should never go red from there at all. So if I have 2 contracts and it hits target 1, I'm taking half the position off at target 1, and then I'm moving my target up, or my second contract, to break even or slightly above break even. So it's a winning trade no matter what. I'm not losing any money on that. Did you say take trades at the top/bottom of BFs for higher probability trades? So what I mean by that is this. Let's look at, so this is Apple on the 4-hour. Let's go on the 15-minute time frame. So let's say this short right here. Let's say you go short, right? Sure, it hit your first target at this low from, this 2 down, but you only got one target, then a reverse bullish. That is kind of in the middle of these 2 broadening formations that we have here and that we have here. A better trade can potentially be a rejection and reversal off a broadening formation, in the sense of we get this rejection and then you can take that 2 down short. It hit the first target. Granted, it kept on going up. Or you have other setups here that you could have taken the bearish reversal back down and you could have caught a bigger move off that broader information, right? Or even this rejection here, this 3-2 down. And if you wanted to go long off that level, you got a hammer and then it goes 2 up. Granted, you know, after that first 2 candles, it came back down, but that should be a winning trade right there. Even here, I probably wouldn't take any bullish or bearish setups unless it's like off a very specific level. Sure, we do have back-to-back shooter candles, so you can take that short if you want to for a quick move down. I'm just very, very picky on the trades that I take. So I'll wait a day or two if I need to for a good setup, even though granted I trade basically every day. But yeah, does that make sense? Like why you don't really want to take trades kind of in the middle of nowhere. You want to take them off those proper levels. Cool. All right. Somebody who I guess their name is AITE. I'm not sure if you're in here or not, but all they said is they want to learn about the strat. If you're not in here, I'm not answering that question. Jason, is Jason in here? I don't see Jason, so I'm skipping you. Is Alex in here? Alex, are you in here? All right, looks like those people aren't in here. All right, so with that being said, you guys can continue asking me whatever questions you want. Anything at all. Also, B, you mentioned the strat is one of the best forms of price action. I can't necessarily say if it's the best form, just one of the ones that I know, and the strat just makes it very simple. It tells you when to get in, when to get out, when to do absolutely nothing. Because when I first started trading, my first mentor was like, yeah, you know, price action, price action. I'm like, what does that even mean? And he never really explained it properly to me. Like the strat, like made it super simple for me to understand. So is it the best? I'm not sure. If so far it's the best for me from what I've discovered. I'll tell you that. Also, Kia, you asked like my bias for the day. I'll have like an idea of what the market structure is telling me, but I'm still going to be doing whatever the strat tells me. So let's say, for example, for SPY, as you know, with my W setup that we have right here on a higher time frame, we get to push down the low, the move back up, push back down with a higher low, and then it reverses back up. So if this W setup is going to be valid, we should be heading back to 550 on SPY. When? I'm not sure. Maybe this week. That would be lovely. We'll see. So this specific setup wise, I'm thinking we go higher. But I never necessarily want to go into a day with a specific bias because I don't want to cloud my judgment. Because if you're going to be thinking, oh, the market is bullish today or whatever it may be, you know, you don't want to get stuck in that because then you'll be missing other setups, right? Like you'll get people who will be like, oh, the market is going to go up. And then you'll be so stubborn that you miss a beautiful short trade. Do you look for daily, weekly signals or strictly the 4-hour? Great question. If I'm day trading, I usually look for 4-hour triggers or day triggers, but generally 4-hour triggers. If I'm swing trading, I'll be looking for daily triggers and weekly triggers, sometimes monthly triggers. I usually swing trade if I'm selling premium, not necessarily if I'm going long on premium. Sometimes I do, sometimes I don't. It really depends. But generally, I usually do this I usually swing trade on the daily, weekly, and monthly timeframes, and I day trade using the 4-hour. So pretty much this is my setup when I'm trading. I have Tesla up here on the 4-hour, and then NVIDIA on the 4-hour. And I'll choose one or the other. I don't trade both. I'll choose either Tesla or NVIDIA. If it gaps up, then I'll just go down to the 5-minute, and then I'll just be looking for a TTO to get in. And then over here, when I'm trading futures, I have YM charts up. I have the YM chart up. So for YM, the first thing I'm gonna have up is the 4-hour up here for my initial trade. If it gaps up or down, then I immediately disregard the 4-hour and I'll go to the 5-minute. So I'll have the 5-minute up, the 15-minute, the 30-minute, and the 1-hour. The 5 and the 15-minute is for the TTO setups, and the 30-minute and the 1-hour are for other setups that I look for. Again, you want to keep your trading simple. You don't want to overcomplicate it, and you don't want to overwhelm yourself. Because people ask me like, oh, your watch list has like 8 different stocks. You trade all of them? Absolutely not. I'm not one of those people who can. I can only trade 2 things maximum a day. Or else my brain is all over the place, and that's not good. You're still struggling with your stop loss, but I heard what you said earlier. Use 50% of the previous candle or the bottom of the candle that is opening. Yeah, so to make it make more sense, I'll label the candles so we can all be on the same page. So let's say this triggers a 2 up like this. And where's my arrow? So this candle here, the fake one. Actually, let's go to Bitcoin because it's live, so we can see it live. Oh, cool. I'm up on my paper short. Anyway, so let's go to the 1-hour. Actually, no, let's go to the 4-hour. So this trade right here, this 2 down, this is the trigger candle because it broke this low and now we're in a short. So this candle here is the trigger candle. This candle here, right before it, is the setup candle. And from what I've been taught about the strat, your stop loss can be in different places, depending what works best for you. So your stop loss can be above, in this case, since we're short, it can be above the trigger candle, which is right here. Or it can be above the setup candle, like this. Or it can be 50% of the setup candle. So you can get your fib tool out. You can just draw your fib from the bottom to the top of that candle. All right, cool. This 50% is this blue line that I have here. So that could be my stop loss. Whichever one is in line with your risk tolerance. For me, it varies on what I'm trading. Let me know if that made sense. Cool. All right. Any other questions that you guys have? We still got we got like 10 minutes, like 5 minutes, but we can go for like 10, 15 minutes over if you have any other questions. And while you guys are typing a question, I would ask a favor from you guys. Let me bring this up. For whoever signed up on WAP for the Trader Circle, if you could leave me a review on the page for your experience on today's class, or if you work with me or whatever it may be. I'll greatly appreciate that. If you don't know how to leave a review, I'll show you an example for other things that I'm in. So when you click on whatever thing you bought, on the top, there's going to be a little arrow. You're going to click on that and then say leave review. So when you go to mine, you click on the arrow. You're not going to see it because, you know, I'm looking at it from my perspective. It'll say leave review. So if you could leave me a review, I would greatly appreciate that. Can you show the inputs, style, and visibility for the strat assistants? Absolutely. And I'll get to the other questions next for Kia and B. Let's go to the strat assistant. So when you get the strat assistant, it's going to look ugly. It's going to have like the bar color. I'm very visual and I like my charts to be clean and uniform. So this is ugly with the different colored candles. So I turn off the bar color and then I just color, then I just have, you know, the different colors under the candle. So if it's a 3 candle, to me, I just make it white. If it's a 2 down, it's red. If it's a 2 up, it's blue. If it's a 1, it's just yellow. I think that's default. It'll have the arrows like letting you know if it's a 2 up, 2 down. I already know if it's a 2 up, 2 down. So I just have that off. The visibility, I haven't messed with none of this. This is just default. The style, everything is also default that I have on. I just turn off the bar color and the shape. And then the input, I don't need the previous day high and stuff like that. So, you know, I have that turned off. And everything else is just default settings. Can you break down the numbers on the ATR indicator? Absolutely. So the ATR indicator, the number on the right side is on average what that specific ticker moves in a day. So Bitcoin on average moves $3,285 in a day on average. I think it takes like the last 4 to 7 days of data and it calculates that amount. The day range is how much it's moved so far in the range. So since the candle opened, that's how much it's moved, which is 29.9% of its full ATR. Let me know if that helped. Cool. Let's see, Kia, when you're trading 2 tickers at once, do you automate them both? I struggle paying attention to more than 1 ticker at a time. Absolutely, Kia, you know it. So for futures, it's just a lot easier for me because let me log in here. Give me a sec. For futures, it's super easy because for futures, I already have my bracket or my ATM settings ready. So let's say for the sake of the conversation, I get in, let's actually go on a different time frame. Can I zoom in? That's not how I want to zoom in though. All right, so let's say I'm looking to go short under this candle. Let's say I put my stop order here. What the heck? That's not what I want. There we go. All right, so let's say I want to go short under this candle right there. And I just place my order. What's the low? 39570. So I'll put my stop right under that. And let's say my stop loss is going to be above the setup candle. So I just move my stop loss up there. And then my first target is going to be right here. So the first target, I'll move there to the first target. And then my runner, I'll put, let's say, at the second target, which is here. My job is done. I could literally walk away from my future trade and just focus on options. I don't need to do anything anymore. The trade will automate itself. And what I love about futures, at least using Tradeovate, is that you can really customize your ATM setting. So for this specific one, let's say when I'm taking a 4-hour trigger, once the first set of contracts hit 40 points in profit, it's going to move my stop loss from -50 to plus 25 points. So the first half of the contract is winning no matter what. And then let me cancel this trade before I accidentally get in the trade. So with the ATM settings, the way you can customize it, I literally just get in on the 4-hour entry, and it does its own thing. It takes me out at my predetermined levels and such. For the trailing stop, do you mean for options? I don't use trailing stops for options. I maybe used it like once. Yeah, for options, I don't use trailing stops. I just, take it off when it hits the specific level, and then I just keep it moving from there. I would probably say you can look up some videos online and paper trade it until it makes sense for you. But for Thinkorswim, I've never, or even just in general for options, I've never used trailing stop losses. Either I just do it based on the premium, or now that I've discovered the market conditions for the specific stock price, but I don't use. Are you able to customize those settings once you're in a trade? So you need to customize this before you get into a trade. You can't customize it after the fact because the trade is already, excuse me. The trade is already there. So let's say here, if I just get in, put a long, there's no ATM setting set up here. And if I turn on my ATM, it's still not on that trade. So if you're going to be using it for futures, your ATM settings or bracket orders have to be set before you get into the trade, or else you don't have any bracket orders. Yeah, Kia uses Thinkorswim. Oh, well, yeah, like I just showed you. So if I want to go along here, you can see the red lines that pop up on the screen. Let me actually just move this. So if I go along here, I can just go on the chart, just move my stop loss wherever I want, and my take profit once I set the order. So yeah, you can mess with it like that after you get in the trade. But if I don't want to mess with the trade, I have my ATM settings do everything for me. So once the first set of contracts goes 40 points in profit, it moves my stop loss automatically from -50 to plus 25. So this set of contracts here is going to win money no matter what. Once my first set of contracts hit 50 points, it's automatically going to sell these three. And then I have the remainder of my position that once it hits 50 points in profit, after pretty much the first trade, the first part of the trade gets taken out in profit, my auto break even and my auto trail get kicked in. So now this trade is managing itself. It moved my stop loss up to 25 points in profit. And then my max target is going to be 100 points, or my auto trail is going to move my stop loss up every 15 points that the price moves in my favor, 15 points. So it's either going to hit 100 points in profit, or it's going to stop me out whenever it stops me out based on, whatever happened in between that levels, or those levels rather. So can I just use Thinkorswim desktop without signing up to their broker? I think Schwab gives you 30 days as like a guest pass. So Karika, no problem. Thank you for coming out. Appreciate you asking your questions. I will see you on the internet. So yeah, Abdal, I think for Thinkorswim for Schwab, they I think they give you 30 days just to try it out without making an account with them. I think, I don't remember exactly. Just keep in mind, if you don't live in America, I don't think you can sign up or use it. After they bought out TD Ameritrade, I think Canadian users no longer are able to use an account with Schwab or Thinkorswim. And Thinkorswim, they don't charge you anything. There's no fees to open up an account. The only thing though is that they charge their like commissions are higher. So for one contract, it's 65 cents if you're trading options both ways. So it's 65 cents buying, 65 cents selling. However, like B mentioned, he got his fees down to 56 cents, unless you meant to put 65. And if you haven't done this yet, B, or anybody else who uses Thinkorswim, you can call Schwab, and depending how much you trade, you can tell them, hey, can you lower my fee structure for the contract? And they'll lower it. The lowest I've seen was like 0.20, 0.25. I currently have like 0.40. So depending on how much you trade, they'll lower it like pretty far down, because that stuff. Gotcha. Yeah. So B got it lowered from 65 to 56. And trust me, those little cents add up. So let's say he got it down to almost what's that? Let's say 6. Let's say he got it down like 15%, more or less. That adds up. So if you're spending $1,000 a month in fees, you're saving 150 bucks. So something to keep in mind if you haven't called them already to get that added. Cool. I'll take 1 or 2 more questions and then we'll wrap up, see what everybody's biggest takeaway was, and then we'll go about our way. Sweet. Any other questions you guys have before we wrap up? Cool. So a reminder, as just a favor to me, I would greatly appreciate if you guys go for whoever signed up on WAP. You can click on the Cerulean Mind Academy, click on the little drop down right here, and it'll say leave a review. And if you could leave me a review, I would greatly appreciate that. Yes, if you signed up to this class within 24 hours, you need to wait 1 day to leave a review. So if you signed up more than 24 hours ago, then you can leave a review. For whoever signed up today, you need to wait 24 hours. And then you can leave a review. So if you signed up, I don't know, like 7 p.m. today, you need to wait until like 8 p.m. tomorrow to leave a review. Cool. So what was everybody's biggest takeaway? What was the biggest thing that you learned in today's session? Or what was the biggest thing that stood out to you? You can type it in the chat, or you can come off mute and talk. Either one is fine. Stop loss? Yeah, definitely. Stop loss is very important. Remember that losing is part of the game, and you're going to lose trades. I lose trades. Perfectly normal. I ended red. One of my accounts for futures was green. Another one was red, and then my options account was red on Friday. Perfectly normal. But it was a small red day because I followed my rules and my risk management guidelines. Your stop and just don't watch the screen. Set it and do other things. Yeah, definitely. You know, once you get into a trade, as a trader, your job is done. Just set your alerts or set up your trade if you can automate it. If you can automate it, you know, just make it simple for yourself. Because again, when I was working with Randy Howell, he's a trader psychologist. Highly recommend you guys check out his YouTube videos. I'll type his name in the chat. Randy Howell, great guy. You know, you want to make sure that you're limiting all of your triggers. For me, before I used to get triggered by looking at the chart. So I'm like, all right, my P&L, I always turn off I always turn off my P&L. As you guys can see, I don't see my P&L on my Thinkorswim account. On TradingView or Tradeovate, I don't see my P&L because the P&L is irrelevant to me. I only see my P&L when I'm journaling. I'm like, oh, cool, that's how much I made today, or that's how much I lost. So P&L, if that triggers you, don't look at it. If you're in a trading group and you see people posting profits and that triggers you, don't trade on the charts. For people that I work with and my students, the first thing I tell them is when you trade, it's your trading, not you and your friends, not you in the group, you in the chart, and that's it. Especially if you get distracted or you get influenced, because if you're looking to go short, but you're looking at the chat and people are saying, I'm going to go long, now you're going to get, you're going to, man, what's that word that I can't think of right now? Not distracted, well, you will get distracted, but I can't think of the word, but basically, you might be dissuaded from taking your short and you'll go long. And then what happens? The short wins and the long loses. So you got persuaded by looking at the chat to go against your trade plan. So I like to build self-sufficient traders. Of course, you can hang out in the group if that doesn't affect you, sure. But if it does affect you, definitely stay off the chats. I'll tell you that, because you want to bring up that self-confidence in yourself. So something to keep in mind. B, if she doesn't see the screenshot, you can DM it to me on Discord, and then I'll post it in the group. And I'll tag her so she can see it. And yeah, Mariana, the strat, when I first discovered it, it was super confusing. But the more you spend time like looking at it and like understanding it, it gets easier. I can look at everything like the back of my hand now with the strat. I can spot a TTO a mile away. When I first started, I was like, what the heck is a TTO? What does it look like? Where do you get in? But after a while, it just gets easier. So, and remember, if you're new to the strat, that's normal if it's still confusing. It took me about a good 6 months to really understand the strat. To start taking trades, probably like a month or two, maybe less than that. Granted, I worked with like Brown Strat King and the other strat leaders like Trust My Levels, True to the Strat, Faith in the Strat, and the other strat mentors that I had. So they helped me, speed up the process. But yeah, if in the beginning, if you don't get it, perfectly normal. Don't worry about it. I was there too. Just remember to ask me questions as you go through the material so I can help it clear it up for you. Cool. Any other big takeaway before we end the call? I'll give it another minute, and if nothing, then we'll wrap up. Do you have a recommendation for back testing? I don't use like any back testing software. All I really do is just like go on the chart itself. So let's say for YM, right? For those who trade futures, for YM, when I'm taking a trade off the 4-hour time frame, regular trading hours, remember, my stop loss is 50 points, and my first take profit is 50 points. I got that number by back testing the strat triggers on the 4-hour, and I saw, all right, on average, if price goes more than 50 points against me, then this trade is invalid and it's going to be a loser. If it goes at least 50 points in my favor, it's going to be a winner, and that happens more often than not. So for example, let's see. Let's bring up my journal. So I started taking only strat trades for YM the second week of July. And I've traded 1, 2, 5, 10, 14, 17, 18, 19, 20, 21 days, only taking 4-hour triggers for YM. And I ended, what was that? Did I say 19 or 21? I forget. Anyway, 19 to 21 trading days. And I ended red 6 days. So 6 days I ended red. And Friday was my first losing day since July 25th. So I had 1, 2, 3, 4, 5, 6, 7, 8 winning days in a row until Friday when I ended red. Just taking the 4-hour setups on YM. So I just back test it manually and just collect information like that. Like even for NVIDIA, when I started trading that, for NVIDIA, once it triggers up or down, I take profit every dollar it goes in my favor, because when it triggers, it's at least going to hit $1 based on its ATR of 8. So every dollar that NVIDIA goes in my favor, I trim my position. And then my stop loss is usually, so like in this case for NVIDIA, if I'm going to take this 312 up tomorrow, my stop loss, I would use I'll use a setup candle, the inside bar, as my stop loss. Because I'll like, $1.62, $1.50 against me, that's within my risk tolerance. I'll take that. So yeah, hopefully that answered your question. All right. Thank you guys for coming out. Appreciate the questions. I'm going to post up this replay and the recording if you do want to see it again on YouTube. Probably if it finishes processing, it'll be up tonight, like at 11 a.m. or 11 p.m. Eastern or midnight. If not, I'll just schedule it tomorrow for like 5 p.m. Eastern. Other than that, thank you guys again for coming out. Reminder, you can leave me a review. Greatly appreciate it. And thank you guys. I will see you next month, and I will see you guys on the internet. Enjoy the rest of your Sunday, and I'll see you. Take care.